Asset managers have a self-interest in crypto's future. I mean, they certainly do now. So whilst the Financial Times is basically writing about the new interest in crypto from major financial institutions such as BlackRock, let's read what they have to say. So while cryptocurrencies were falling in price, established asset managers such as Ardin, Charles Schwab, and BlackRock, I don't know what Ardin, were hard at work looking to secure a foothold in the market. So yeah, definitely Charles Schwab. Not by investing directly into volatile cryptocurrencies. Aberdeen is a UK investment group. So they brought a stake into a digital asset exchange. Yeah, because crypto exchanges make lots of money. Yeah, and they point out something very good. BlackRock opened the facility for their clients to buy crypto through Coinbase. So it doesn't necessarily mean that BlackRock is going to suddenly start making a direct investment into the crypto market. They're just providing the option for their clients. This Financial Times article points out something very good. We shouldn't forget history. BlackRock's chief executive Larry Fink was an early Bitcoin critic, opening him to charges of, at best, inconsistency. When he was sniping in at Bitcoin in 2017, crypto's foundations were more fragile than now. Yeah, definitely. Asset managers need to be more open to multiple futures of finance. Crypto is definitely coming. And if you don't provide such exposure, or if you don't provide these options to your clients will go elsewhere. Yeah. The article goes on to say how that the institutions are investing into the infrastructure. Yeah, so it's really just a commentary piece from the Financial Times. There's nothing negative at all about this article. It's really just providing an opinion that, well, yeah, BlackRock and other institutional investors are continuing to be involved in the cryptocurrency space, but they're not taking a direct involvement, more of an arm's length, allowing the industry to develop and be ready for when they can offer it to all their clients. Crypto Briefing writes, King of the Shill, does BitBoy Crypto have your best interests at heart? So BitBoy is being destroyed because he actually was going to sue another YouTuber for basically negatively talking about BitBoy and the way he shows scam projects. So BitBoy seemed to was emotionally damaged from the video and decided to sue the other YouTuber, but it's completely backfired against BitBoy, because in the end of the day, BitBoy is somebody who promotes scam projects, let alone just gets people to recklessly trade into crypto in general. So he claims that he's not promoting projects or being paid to promote projects, but I've seen something which suggests that he's still involved in managing and taking investment share. So I would be very skeptical of every single token he talks about on his channel. So anyway, let's read the article. BitBoy Crypto is YouTube's biggest crypto influencer. He is also notorious for shilling dubious projects and has recently come under the spotlight after threatening to sue another YouTuber who called out his antics. But he didn't threaten to sue the other YouTuber, he literally filed a court paper. So, okay. So key takeaways. BitBoy Crypto is YouTube's biggest crypto influencer, popular among newcomers in the space. And this should literally say, he's only been criticized really for actually just promoting scam projects and giving the impression that they're going to become, well, they're going to make you rich. He didn't threaten. He literally filed the court papers to go and sue him. And he only dropped the lawsuit because he didn't realize it would become public. So if it didn't become public, he would have just gone ahead and sued Otozi. Yeah, Otozi published his video titled, "This YouTube Scams His Fans, BitBoy Crypto." But because BitBoy Crypto is in the guilty, everybody naturally sided with Otozi. Huh, Ripple, like XRP, really? So David Schwartz from Ripple says, "It looks like everyone is doing the right thing now. Yay for happy endings." I mean, BitBoy's only dropping it because the lawsuit became public. Really? Who is this? Is this Otozi? So this is Otozi, right? Supposedly Otozi said that he never dropped the lawsuit. I didn't realize this. Oh, okay. So on August the 26th, Otozi says that he never dropped the lawsuit, or BitBoy never dropped the lawsuit, but another lawyer said, well, it's probably taken a few days for it to come through. Yeah, BitBoy confirms that the lawsuit is being dropped and it's just a process, which is, looks true. Definitely the court systems are very complicated. So thankfully, Crypto Briefing goes on to destroy BitBoy Crypto. So CoffeeZilla, Anthony Pompliano, sorry, I don't know how to say it, and Zach XBT have called out BitBoy for constantly promoting scam projects. That's what it should say. And whenever he gets paid, or whenever he promotes these scam projects, he gets paid anywhere from $20,000 to $35,000. And he gets paid for everything. So $35,000 for dedicated crypto project reviews, $20,000 to mention a project on one of his live streams, $40,000 for an interview, $10,000 for a Telegram MAA, $2,500 for a text article on his website. So this is the one pamp network that's got him in big trouble, which was a rug pull. And basically after it rugged, BitBoy Crypto deleted the video from his YouTube channel. Crypto Briefing goes on to say, BitBoy is not the only one who's promoted Ripple. Supposedly, BitBoy said, "I believe Ripple will be the most expensive coin in the next few months," said Armstrong. XRP peaked at $1.32. 9 days later, it now trades for around 33 cents. Oh, really? So BitBoy Crypto almost sued Twitter, or considered to sue Twitter because he wouldn't get a blue check mark. This guy is like a bit full of himself. This is a great point. I love this question. How long can BitBoy last? So basically it's saying that his viewership has barely changed since the bull market of 2021. So even if old viewers drop out, there's always going to be new people in crypto to replace the old viewers, which is sadly true. For now, BitBoy Crypto is still the world's biggest crypto influencer. But with every new controversy, Armstrong's media business comes closer to suffering the same fate as the dubious tokens on his Shill list, going to zero. So I just thought this was interesting. I don't know much about this article. Let me try to. So I'm guessing there was a data breach at Shopify, which caused the users to have their crypto wallets drained. And Shopify wanted to pause the lawsuit, but thankfully the judge decided otherwise. So from The Guardian, crypto crash, how a teacher's dream investment turned into a nightmare loss. Same thing again every time. Same stories in the last bull market. Sorry. If I sold at the top, I would have had £250,000. Everybody says this. So anyway, to quote him correctly, he says, "If I'd sold everything, I would have had £250,000. Duncan says ruefully of the staggering worth of his cryptocurrency holdings at the start of this year. Why didn't you just sell? You just got greedy." So it says, like lots of amateur investors, the 47-year-old former primary school teacher got into cryptocurrencies in a big way during the coronavirus pandemic, plowing his life savings into in a portfolio that was ballooning in value and that he believed would enable him to on the property ladder. Yeah, everybody's desperate to get to the next level and make stupid mistakes. So he says, I wanted to get to $500,000, then take half out. I had over $300,000 around Christmas. Come on, should have just sold. So his original, so he turned £40,000 into £400,000. 10x. Insane. Supposedly, FCA says most crypto investors are men over 35 years old from AB social grade, so middle to upper class. But they only pull in around £300. People who come into crypto and invest in crypto, absolutely, the vast majority don't understand anything about crypto or being an investor, really. So in the UK, the government is changing the law to place adverts for crypto assets under the same rules as other financial promotions, such as stocks, shares, and insurance products. The move follows concerns about misleading cryptocurrency ads. That's good. People need to be warned. People should be told, like, stop gambling into crypto. So another story, somebody else investing into Luna. Luna was dumb. Like, I honestly paid no attention to Luna. Only when it crashed did I care about it. This guy's gonna pursue or attempting to pursue a job or career in the industry or the crypto industry. But at the same time, he's gonna sell his assets, or he's considering to sell his assets. Doesn't make sense. Does not make sense at all. If you really believe it's gonna rebound, you don't need to sell. So Singapore seems to be going really hard against crypto. Supposedly, they even considered an outright ban for retail investors, which maybe would be too much, which I think is better because, in fact, they're going to go to curb crypto leverage bets. So they want to stop or to limit leverage bets and impose a suitability test. Definitely people who use leverage, I mean, it's really tempting because you can multiply your profits. You can easily make a stupid choice. So Ravi Menon, Managing Director of the Monetary Authority of Singapore, signaled this stance on Monday. He added that the regulator may restrict retail investment in the crypto sector through new consumer protection safeguards. So he's describing as frictions. Adding frictions on retail access to cryptocurrencies is an area we are contemplating. These may include customer suitability tests and restricting the use of leverage and credit facilities for cryptocurrency trading. The city-state's central bank chief further noted that retail investors have been irrationally oblivious about the risk associated with crypto trading. Yeah, that's true. I think many people are oblivious to crypto trading. It's been like, so get rich quick. Not enough people are investing into crypto for its potential, its technology, for what kind of solutions it's going to offer. Oh, impressive. So actually in Singapore, they want to ban advertising tokens in public spaces. The ban applies to both physical and virtual adverts, particularly online and on social media platforms. But this is good. Like, genuinely happy if assets are going to be tokenized. It's exactly what the future should hold for crypto. Indonesia's tech firm GoTo buys local crypto exchange for $8.4 million. Wow, so Gojek, they brought a crypto firm? A crypto exchange? So Gojek is a ride-sharing application in Southeast Asia. They're basically like the Uber. They weren't really Southeast Asia, but they started expanding, and they originally were from Indonesia. And Grab was located in most of Southeast Asia. But then Gojek started to expand. So Gojek is a behemoth in Southeast Asia. Cryptocurrency has gained its popularity in Southeast Asia's biggest economy, with total transactions volume of the crypto assets in 2021 up more than 1,000%. Indonesia is a huge market for crypto, so very interesting. And Gojek. wants to buy an exchange. So Singapore says crypto ban for retail not likely to work. So another article here talking about the big news from Singapore. So they really have been considering to ban access to crypto for retail investors. MAS, the Monetary Authority of Singapore, is weighing up new measures to restrict retail trader access to crypto, though it conceded Sunday banning them outright would not work, which is impressive. They really did consider banning crypto for retail investors. A ban on retail traders' access to crypto can't overcome citizens' ability to circumvent it. Yeah, because crypto is, even as centralized exchanges are easy to get access to, right? And decentralized tokens are easy to buy and sell. So again, this article goes into about how the MAS will be adding more frictions on retail access to cryptocurrencies for retail, so for retail investors, and they will limit the leverage trading. Was Singapore the first? Wow. Okay, so Singapore was the first developed economy to introduce clearer guidelines as far back as 2016. So earlier this year, Singapore closed a regulatory loophole that had allowed domestic virtual asset providers or crypto exchanges to offer their business abroad while evading oversight at home. They're really serious in Singapore. I think it's fine. Like, so many retail investors are over leveraged in the crypto markets, or just treating crypto as a gambling opportunity. So it's good if they add more regulations, and then legitimate crypto projects will continue to rise. 64% of surveyed American parents want their kids to study crypto in school, according to Crypto Potato. Nearly 2/3 of US parents think children should study cryptocurrencies in school, while 40% believe blockchain technology is also that important. So who's done this study? In a recent research conducted by study.com. That's good. So mums and dads are not that supportive of NFTs, since only 25% said they should be included in school programs. Well, only 800 people surveyed, or 800 American parents were surveyed in this research. So it's not a very big research. Definitely could be manipulated. Yeah, I definitely think this research is skewed. I mean, 68% of parents admitted to being cryptocurrency investors. On average, they have contributed around $766 to their children's future education using profits from their investments. Yeah, there's something very strange with this research. There's 68% of parents being crypto investors. Like, that's too high compared to the national average. Definitely too high. Yeah, anyway, like, nothing against blockchain should definitely be taught as part of school education, and crypto is going to become a future. So improving financial literacy is only good. Formula One files trademark related to NFTs and crypto. So they have a new trademark. Let's see what their trademark is about. Racing behemoth Formula One has filed 2 trademarks related to non-fungible tokens and crypto for the Las Vegas Grand Prix event, which is expected to take place in November 2023. So they're literally filing a trademark in relation to what will happen at the race. So as per the filing, Formula One plans to offer virtual goods in the form of sporting equipment, virtual clothing, headphones, lanyards, souvenirs, keyrings, digital art, jewelry, sculptures, and other items. So I guess you're going to be able to buy them at the event. Hey, it's definitely a good way of using NFTs. Like, it's like buying merchandise, right? So Formula One is merely selling merchandise in the form of an NFT. There's nothing wrong with that. It's one of the ways NFTs can be used. 46% of US crypto hodlers not happy with their investments, according to Crypto Potato. Only 15% of American cryptocurrency, investors said their investment has done better than expected. And this is research conducted by a Pew Research Center. So the accuracy or quality of this study should be a bit better or reliable. The study further disclosed that the share of crypto investors in the US had remained relatively the same compared to figures from September last year. The lack of significant changes comes despite the fact that Bitcoin reached its all-time high price in November, and then the bear market started in December. I think it was apparent, but like in March, by the end of March, it was obvious we was in the bear market. American investors expected more. That's true. Like every YouTuber or crypto influencer was saying we was going to go to 100,000. That didn't work out. The research conducted in middle of July shows that almost 50% of the US crypto holders did not think their investment would be in the condition it is today. 31% said that they expected this outcome, while only 15% stated that allocation turned out to be better than anticipated. It has something to do with 100K by Christmas in 2021. That was almost a year ago now. Crazy. I've had a busy year. So 40% of Americans born between 1981 and 1996 own digital assets. It's like boomer generation you saw in stocks and brought into stocks like crazy. Now the millennial generation are buying into digital assets. And that's the thing. Right now, everybody's broke. So this guy, Eric Satz, he believes people want to go into crypto but can't because they can't afford it. Because in a world of conspicuous consumption, soaring living costs, and mounting student loan debt, millennials find it difficult to invest for the future because they are struggling to afford the present. That's so true. Crypto Potato reports about how the Central African Republic court deems unconstitutional to buy land citizenships with the country's native cryptocurrency. So even with their own native cryptocurrency, they don't want any serious trading, or they don't want it to be used for anything serious. Wow. They say it's unconstitutional. Perhaps it also has something to do with the fact it's extremely volatile. They'll probably change this in the future anyway, so crypto is becoming mainstream anyway. SEC hones in on small cryptos to bolster Oversight case. So seems like, but we know this already, like the US government is going after privacy coins, and they definitely want to go after Monero. Reminding everybody that Gary Gensler actually did say Bitcoin is not a security. Yeah, I mean, the US government's obviously shut down Tornado Cash, but they've been wanting to go after privacy coins for a while now. And obviously, like tax evasion is one thing they don't like. The Tornado Cash was obviously just for criminals. I have said it in one of my other videos that I'm not too against privacy tokens. People have a right to privacy in general, but I think we should follow the laws. We just don't need all our business known by everyone. So yeah, basically the current target of the SEC is Stellar and Zcash. US consumers face emergency expenses 3.5 times larger than Fed estimates. So again, the Fed gets something wrong. Let's read these bullet points. So 59% share of US consumers living pay to paycheck in July 2022. 46% share of consumers who paid for at least one expected expense in the last 90 days. 36% share of paycheck to paycheck consumers who would be unable to pay $400 in emergency expenses. Yeah, sad. So in May 2022, the Federal Reserve released the economic well-being of US households in 2021. The latest edition of an annual report, often used in measuring financial health. Since 2013, these reports have tracked consumers' stated ability to afford a theoretical $400 emergency expense. While the economy has evolved rapidly over the past 9 years, that 400 benchmark has remained stagnant, raising the question, should that figure be updated to reflect today's reality? Exactly. So payments, I'm assuming this website or magazine is called Payments. Payments data finds that this is not just a thought exercise. Nearly half of US consumers have faced at least one unexpected expense in the last 90 days, with 56% of emergency expenses costing more than $400. In fact, consumers' average emergency expense was approximately $1,400. Wow. Additionally, living paycheck to paycheck is becoming the norm. And as many consumers now live paycheck to paycheck without issues paying bills as those who do not live paycheck to paycheck, the affluent are not immune to these trends either. Yeah. Goodbye middle class. This is good insights into the economy, really. Like the Fed is definitely out of touch with reality. Like last year they said inflation would be transitionary. That obviously didn't happen. We don't see a transitionary inflation. Like inflation's what meant to come back down to 3% in 2024 or under 4% in 2024. Like not transitionary. So yeah, it's good research from Payments. NewsJigger. They have done some analysis of their own on 60 plus games and Web3 services and found every Web3 game has 40% bots. This does not surprise me. So I thought this Twitter post was very interesting. So this guy Levan, sorry, I don't know where you're from. So we detect bots and multi-accounts by linking wallets belonging to the same person. Here is a tiny world game DeFi or GameFi graph. A top 3 game on BNB chain with 35,000 monthly active users. 70% bots. I mean, let's go into their website. So they have the full research down here. What they've come to the conclusion with. And lovely Inu has 28% bots. A lot of these like crypto projects will fake the trading volume. It's like, I guess games will fake the activity to make the game seem more popular than it actually is. I mean, tokens will fake trading volume just to make it look like people are trading it. No one is. So Wall Street games, 18% bots. Polycrowns, 52% bots. It does surprise me that Coin98 is on this list though, high up. 69% on Coin98 is bots. It could be the tokens are faking the trading volume. Or it could be market makers, I don't know. I don't think it's market makers. Like market makers wouldn't have hundreds or thousands of bots. They only get given a few accounts for free trading. So Coin98 must be just faking trading volume. Tiny coins, 70% bots. It doesn't surprise me. Does not surprise me. But look, my DeFi pet token, another Vietnamese project, 41% bots. I mean, there are some good projects here. So you have some projects with less than 1% or 3%. So those are some genuine projects to look out for. I also thought it was funny, like almost all the chains are Binance. BNB chain. BNB chain is just scam. Like, you've only got one project here. And the one project here for Polygon, they've classified this project as having no bots. And Ethereum's here and they've got no bots as well. But every other chain, oh, I'm sorry, actually, there's Polygon here. Okay, so one Polygon project has 54% bots. Like, Polygon is definitely a better chain though. So you could say, statistically speaking, Polygon is still okay. BNB chain is full of bad projects, like really bad projects. Fewer Americans say they are living paycheck to paycheck as inflation begins to ease. Are you mad? Like, it's saying, as of July, 59% of Americans said they lived paycheck to paycheck, down from 61%. So this is worth writing an article saying that few Americans are living paycheck to paycheck. Like, it's a decrease of 2%. Like, it's nothing. Percentage drop from 61 to 59 is like minuscule. That doesn't say anything. I think this just validates what the other article is writing about, that the vast majority of Americans are struggling, like most people everywhere in the world. So 63% of those earning between $50,000 and $100,000 were living paycheck to paycheck. Christ almighty. In some parts of America, it's really expensive to live in, so it's like all your paycheck goes onto rental or your mortgage. This is definitely not the best written article. It's trying to paint, like, it's a rosy picture. We've seen a decrease in 2%, like 2% from 61% down to 59% is nothing. I think this article just validates that most Americans are still struggling.